Good morning, everybody. Welcome to the Flow Show. Bit of a disappointing Monday, but I'm not going to talk about the football. And it's done. It's over. We lost. Move on. Yes, I've got the ump. Right before we kick off, just to remind you of what's going on at ForexAnalytix. If you join our TFP program, take an assessment, you'll get a free 45-minute one-on-one session with Blake, as you can see on the screen there. That's lasting throughout the month of July. Also, don't forget, if you want some one-on-one mentoring, you can check us out at trader-coach.com to take a session with any one of those pretty traders pictured there in the video clip. Don't forget, you can get 40% off your first hour that you book, and potential for other bulk discounts as well. So check that out there if you need some help with your training. You can pick anyone there and have a good old one-to-one chinwag with someone. Yes, thank you, Michael. Condolences. That's football for you. Morning, Kay. How you doing, mate?
Good morning, Ryan. Good morning, everybody. I hope we don't have to do the flow show in Spanish this morning. Huh?
Absolutely no chance. No, well done to my good mate Leandro. You can just see there at the bottom of the video, Mr. Matador from Spain. And yeah, he's lucky he hasn't got a clown face put over that screen today. But no, well done to him. Right, moving on.
We lost your sound.
Yep, you got me now?
Yep, you're back.
Cool. Right, we're going to take a look at what's going on around the world. Start with a bit of data. We had some Chinese data out overnight. Can't find it. Where are we going? There we go. Quite a bit of data, actually. GDP numbers coming in a little softer than expected, quarter on quarter, coming in at 0.7, missing expectations, down from last month. Year on year as well, coming in at 4.7, well below the 5.3 prime, 5.1 expected. Year to date, GDP as well, also coming in lower. That's putting it below where China are expecting GDP to be for the whole of 2024. There was a bit of positivity on industrial production, coming in a little better than expected, still down on last month. That was year on year for June. The year-to-date number as well, a little bit softer. Retail sales were up, but again, not as good as last time. Year-to-date numbers as well. Unemployment rate staying unchanged. We had the Stats Bureau coming out saying this year businesses faced big pressures and among key sectors. They say that the economy remains the key growth engine for the world economy. Q2 growth was affected by short-term factors such as extreme weather and flooding. China's economy, medium to long term, is seen improving, and the improving trend remains unchanged. They also left their MLF rate unchanged at 2.5%. Now, it's a big week for China this week because we've got what's called the third plenum. This is a big state party shindig hosted by Xi, where they set out everything, economic, social policy, you name it. This meeting happens, give or take, roughly every 5 years, and they can set policy for the next 5 to 10 years ahead. So it can be a big, far-reaching meeting for China. A lot of eyeballs on this one in terms of what Xi may do to get things really rolling. So this could be, if you trade in the yuan, if you trade in Chinese assets, this could be a very big meeting, but it also may have a big knock-on implications for global growth expectations and the like. So this kicks off today, runs for 4 days. Lots of blathering, but we're going to need to be on headline watch for this one this week. Mr. Kanda over in Japan has been out again saying he's especially concerned about the negative impacts of the weak yen in a press interview there. Dollar yen largely holding around the 158s, but a couple of probes towards the 157. Obviously, after the intervention time, market's still a little bit hesitant, I think, to run this higher just yet, based on what's going on. But getting a little bit of a tailwind from softness in the US data and the market sentiment coming around on that. You got any thoughts for this one coming into this week, Kay? We still in intervention risk, or are they going to develop from here?
Intervention as such, I'm not sure. It is possible, though, that they bought enough time into the next Bank of Japan meeting, because now we are like about 2 weeks away from it. So the next Bank of Japan meeting is on the 31st of July. So that's in a good 2 weeks. I think they may just have bought enough time to not let it run higher again. And also, yeah, a bit slower data in the US. Bit uncertainty surrounding the events. They could just bought themselves enough time. To me, the big level is still going to be 157, 30, 40 there. That's to me the new 152. Then the 155 is probably now 157. Yeah, I was relatively neutral. And we also know that the Bank of Japan tends to send out a few feelers ahead of their meetings. And we know what the mega banks were asking about the reduction of the JGB buying by the Bank of Japan. So all of that tells me that we may, for a change, find a few sellers on rallies in the dollar yen. And potentially yen crosses, but those are, as I've been saying so often, those are the barometers really for to know what's really going on in the yen, because we know the dollar situation on one side, and we're seeing that the dollar is a little bit offered right now. And then, yeah, but the crosses are telling us a lot about what's really going on in the yen. So open to any suggestions. I wouldn't think that purely based on the fact of interventions, they have completely turned around the boat. But yeah, I think the market will be on its toes now for the next couple of weeks. We do have the big US data are behind us. Not sure if we get anything really big this week data-wise, but we do have Powell this afternoon. So yeah, it's going to be more of a yen thing than perhaps a dollar thing going forward into the Bank of Japan.
Yeah, thanks, mate. We've had one of the other BOE member popping up now. We had 3 last week. We've had BOE Dingra coming out saying that demand is soft for inflation, or is too soft for inflation to rise sharply, saying it's about time to start normalising rates so we can finally stop squeezing living standards. No shock in those comments from one of the big doves who've been voting for cuts for several meetings now. We still need to see, or maybe hear from some of the other fence sitters, some of those in June who were apparently close to voting for cuts. No real clues as from the ones we got last week. Haskell right on the fence, same as Peel, Mann still staying hawkish. So we'll see if we get any others popping up before we get to the BOE meeting. Data from the US last week, PPI data, and really it put a bit of a spanner in the works after we got that CPI data that the market got all dovish over. PPI coming in much hotter than expected, rising 2.6%, so going above expectations, above last month as well, even while those got revised a bit higher too. Core PPI up at 3%. So that initially, it was a bit of a strange reaction. That initially brought a bit of dollar buying and, you know, the market washing out what we saw from the CPI data, but it didn't last too long. Once again, Kay, we're back in that doesn't matter what the data says. If there's a rally to hit in the dollar, people are going to hit it.
Yeah, absolutely, Ryan. We've seen it on all the dollars. Yeah, the market has its teeth now in the slowdown. Even though, and as you already said, and even though we are not like crashing away in any of the data, but it's got its teeth firmly set into. We need to, and we have cleared out that only one cut expectation, and we're going. The pendulum swings again because we're already nearly at 2.5 for this month. So the PPI didn't change that much, but then the Michigan added to the party, right? For those kind of expectations. So that shows that the market is now willing to look through PPI, which is a bit more volatile, shall we say, but looks at the other data where especially consumer data are weakening. And I think, if I'm not mistaken, this is second time in a row that the Michigan is coming off that much. I wasn't in on Friday, so but I have the impression that this is not the first month where it came down. You see, we're on a bit of a roll there, and yeah, according to Powell's own words, the consumer needs to be clearly watched, and I've got the impression that he's trying to envelope that inside the second part of the mandate, which is jobs, of course. But he says if the consumer is not happy, he may think that he's going to weigh on the jobs market as well. So let's see what happens there. But as you say, the market now takes the excuse to sell dollars when it can.
Yep, very much. We also had the first of the earnings season kicking off, bank earnings coming out, and so-so performance. JP Morgan and Wells Fargo were first to drop off the bat, and they were A-OK, so there's been no real worries on that front thus far. Citi dropped a bit later on, and yeah, some might call it a miss, but you know, it was a very small miss on some of the metrics there. So no big worries at the moment coming from any of the banks. I haven't seen the is there the what's that thing we put out, the earnings calendar? Has that been about today, Kay? Do you know? I was going to look it up. The earnings calendar.
I haven't seen it yet, but there's a load coming out this week, right?
Yeah. So we'll try and chuck that in the chat room for those in the chat room, so you can see what's coming when. Coming over to some of the rate expectations, and this one's quite funny. HSBC shifted their BOE rate cut call after the speakers last week to November from August. Now I went and looked back over my notes. HSBC in March, they moved from June to August, then back to June, now into August, and now they've gone to November. So they've tried pretty much every month on the calendar so far to try and guess when the Bank of England are going to cut rates. So they're all over the shop at the moment, but they changed their call to November now from August, and the BOE meeting is the 1st of August before everyone clears off for the summer. Right, also what we need to just touch on, I'm not going to linger on it too much because it hasn't had an overly big effect on the market, was obviously what happened to Trump over the weekend. Had the potential to be a market move, but I don't think the market really knew what to do with it. And given that there was enough water under the bridge, enough time passed between what happened and the outcome, the market pretty much didn't do an awful lot. We did see a bit of a rally in the dollar, a few dollar pairs going up, but pretty much contained at the end of it, Kay.
Yeah, we saw the same moves as we've seen on past events that would prop up Trump's chances to be re-elected. So we did see the MEX coming under pressure. We did see some of the EMs coming under pressure, like dollar rand as well. Dollar China slightly higher, but that was a combination of the data as well. And then initial reaction on a steeper yield curve was to buy a few dollars. And I do think that is a lot of what we've seen this morning was just correlation algo related. And but we've also seen, and that is something that we discussed with a few people in the room as well. It's yeah, you're showing Bitcoin, but I'm leaving that over to you. But it is also and it should actually be short-lived, that dollar bid, especially versus the majors, I would say. Not talking about the mix or the rand, we can talk about that a bit later, but it should be as well short-lived, because it's not, in the end, it shouldn't be anything positive for the dollar, because we know what the part of the program of Trump and his team is to actually lower rates and lower the dollar in some way. So yeah, we've seen the usual reactions. But perhaps the biggest one we've seen this morning was on and from the start last night was the dollar mix, because this is something that the market has also picked up on prior, is that thinking about walls, thinking about yeah, trying to stop immigration and things. So yeah, the mix is really a bit under the cosh. And also we can add to that we still haven't heard many reforms that they want to do, but time is perhaps starting to play against Mexican peso from now on. That's what I would think.
Yeah, largely the thinking is that this sort of event is going to cement Trump as the winner of the election. Obviously, we've still got a long way to go until the actual election in November, so there's still plenty that can happen in the meantime, policy-wise. I noted Bitcoin. One of the reasons why it probably rallied is that Trump has been in, I think a week or so ago, he was talking nicely about cryptos, that he believes that Americans should be able to mine Bitcoin without restriction and the like. So that he's been a bit more crypto friendly, shall we say, in the crypto universe. That's my thought as to why crypto's jumped on the news over that. But as I say, we'll wait and see. Yeah, the dollar was bid a bit, but as you can see, it's already washed out in the likes of the euro. We had that little opening lower, 10, 15 pips, and now we're back above 109 and testing this 109.10 area. That's been a bit of a sticky level when we've been up there before. So it seems like business as usual continues over there. That's let me just check. I think that's all I've got on the headline front for the moment. Unless you got anything, Kay?
No, Ryan, I think you covered most of it. No, I think we can look forward to what's to come this week.
Yeah, let's have a look at that then and see what's coming up this week in the old handy calendar. So what we have got this week is the start of some of the new manufacturing data for the US for the month of July. Empire State Manufacturing kicking that off. It's been a little bit of a wonky number of late, not really giving any signal one way or another, but we'll still keep an eye on it. Then we'll follow that with a Philly Fed later in the week. So that's mainly the data we're going to get today. Keep an eye on this BOC Business Outlook survey. That can be a bit of a market mover for the loonie, depending on what the comments come from that, what businesses are thinking about things at the moment. Canada stays front and centre tomorrow as well, as we get the CPI data, which I think could be a potential big one for the loonie, based on how it dropped quite significantly between March and April, and then had a little bit of a bounce back last month. So we get to see what happens this month. It's definitely proving the bumpy theory to inflation that a lot of central banks are talking about. Then we get an eye on the US consumer tomorrow as well, with the US retail sales. So we'll get to see how those guys are doing. And we've got a bit of CPI coming this week as well. New Zealand CPI dropping Tuesday night too. Wednesday, we've got UK CPI and PPI, final numbers for Eurozone HICP as well. So again, a lot of information to take into account, particularly for the Bank of England, because everyone's going to be looking at this one very closely to see what indications that means for the next Bank of England meeting. Will they cut in August, or will it be later down the line? Kicking off some housing data as well, starts and permits in the US, a bit of industrial production as well on Wednesday. Then it's a bit of a jobs day on Thursday. We get the latest Aussie jobs, UK jobs. And again, for the UK, this is going to be watched closely, particularly the wages numbers in this one here. Probably the most unimportant ECB meeting we're likely to get on Thursday. Absolutely no expectations for any sort of policy action at this one. I think probably the only thing we might get from this is whether they tee up September or not for a potential next cut, or whether Lagarde's going to be doing the presser from the back of a taxi on her way to the airport.
Yeah, I think that's a big chance. Yeah, exactly. Well, I mean, putting September on the table, and then wishing everybody happy holidays. I guess that's the best we can expect from the ECB meeting this week. If you look at all the data, yeah, we do have a bit of US data out with those retail sales as well, and the Canadian, as you say. I would think that you know what, one of the bigger movers could be those UK inflation numbers this week.
Yeah.
If they confirm a slowdown, then we know how this market pendulum swings pretty wildly. And on the other hand, if it stays sticky, then all of a sudden cable could really take off, or the sterling could really take off. That is at least one that I'm going to keep a very, very, very close eye on, since and I guess we have most of us have a few positions running in the sterling.
Yeah, exactly. I think it could be a very important one this week, as could that Canada data as well. In terms of what the BEOC are going to do, and that continues on Friday as well. So UK retail sales, Japanese CPI coming in the early hours, and then Canadian retail sales topping off the end of the week, and nothing of note out from the US. Yeah. So probably going to have to rely on a few speakers, whoever may pop up. As Kay mentioned, we've got Powell today. I don't know what his subject matter is, so I'll have to have a look at that. But we obviously heard from him twice last week, and he didn't offer us much. So maybe he'll give us something this week. But I'll have a look and see what that subject's on. Right, let's have a look around the grounds. Pretty much a similar picture today in a lot of pairs. We're up against some levels. As seen, euro dollar getting back into that 109s, not really making any headway just yet. So maybe we're just waiting for another catalyst to see us moving our way. As I mentioned before, we have looked to maybe start to break this sort of downtrend. Say these lines are just more for viewing rather than trading. But as you can see, we're up into these prior highs, and we can't get above that now. So if we get above there, we're probably going to kick on a bit. But this is euro dollar, so it's got levels, every sort of 15, 20, 25 pips all the way up to 110. So I don't expect it to be a fast run, and this is coming on the back of some weaker data in the US. Cable, we're up here, the 130, that's your level right now. I was eyeing it for a bit of a tap, a big figure tap around, the usual 129.95s, but we haven't got there, and it's just feeling a little bit strong at the moment. So this is probably high. If we get through there, we're probably going to go and tap the 130 and maybe see if we get a break there. So I might just sit on my hands for that one. Need to scroll out that fib as well. Euro sterling, and OK's. Are you still short bit this, or are you just staying in cable?
No, I'm short. I'm short. I did buy some back below the figure on Friday, but I'm still short. Yeah, I think that's what I said in the room as well just before the show. I do think that there may be some sort of whether it's just a consolidation or a bit of short covering into those data on Wednesday for the pound. So I just want to stay on the safer side of things. Well, usually slice and dice anyway. But I would not be surprised if we see a little bit of a correction on the euro sterling. And as I've already shown as well in the room, this and I think that may come into play this time. This monthly 200 monthly 200 monthly moving average on the euro sterling is around 84.5, and we've never closed below since Brexit, and I think that may be one that we will have to watch come the end of this month. Because we see back in 2022, we touched it and then had a pretty violent move higher again. And we've never closed below. And I'm not a fan of moving averages in general, but this one actually caught my eye. And we know about the 85 in euro sterling, but I think 84.5 may already do the trick come the end of the month, whether we're below or above.
Yeah, thanks for that, mate. I'm pretty much the same with that. In the moment, we've got to worry about what's going on at this 84 zone. We're just having a little poke above it right now. We had been below and stayed below. Couldn't take out this little level below. I think still, if we do move lower, it's going to be slow and steady. I don't think we're going to see any rockets with this one because there's plenty of historical traffic under here. We had all this period around 2022, all these little areas and whatnot. So I'm expecting it to be a bit like walking through treacle coming down here. But if we get down there, we could be heading down towards these lows, which again are some big historical lows down towards the mid to high 82s. Let's call it that. Again, another big, huge, multi-year level down here. We had a couple of pokes underneath it, but we didn't stay there long. So that's if we get there, that's going to be a big area to watch for that one. I got put out my Aussie Kiwi Go. I was trading this on the short side, 111.30 was my stop level. I've got knocked out of that, so I'm leaving that alone for now. Potentially looking at another break up above these levels here, the 61.8 fib. So that could mean we're heading up towards the high 111s, maybe 112s. We'll see it from there. Again, it's a question of more of Kiwi weakness today, I think, than any sort of real Aussie strength. That one's looking a bit weaker. Kiwi dollar compared to some of the other pairs. Aussie dollar staying pretty steady in comparison to that one. So again, it's a bit of Kiwi on the back foot rather than Aussie being too much on the strong foot. But as you can see there, Aussie dollar still holding up as well. Dollar CAD looking a little bit wobbly. Oh, come on. We had this. I'm still thanking my lucky stars I didn't get tripped on my sell stops last week. But we had a little poke above the 136.50, but we didn't last there long. And now we're back below, and it's once again, bounces are getting hit in dollar pairs. And this one is one that is looking like that as well. So we're back in the box, and we get to see whether we're going to have another attempt at the downside or whether we're going to get above this 136.50 and building it from that point. Kay, I'm going to bounce it over to you.
Yeah,
there we go.
Thank you. Well, first of all, let's have a look at what's happening in gold. So on last Friday, while I was off, it had we did trade relatively comfortably above 24, but then we had this setback, sorry, into the US data. But look where it held. It held like around those prior highs. We didn't manage to get below, and this still looks like quite constructive to me. Now we will have to see what happens this afternoon when the US walks in. But this picture on gold, for as long as we hold above 23.90, 85, I would even say like stretch it to 75, 85. This zone here. If we get any decent setback, of course there will be short-term stops. Likely if we get back below, if the US decides that they want a few dollars or so walking in, you never know. But this still looks constructive to me. So, and also in looking at the events which are going on, and we see like the short end of the US yields is coming down, but then the the longer end is holding up pretty well. Despite all of that, gold is holding up pretty well. And this reminds me really, it's too early to tell because this is a much longer period of consolidation, trying to get back down several times and bouncing. But it does start to remind me about what's happening in the high 22s, low 23s. It could be that we are building some kind of consolidation right here and now. But globally, I still find this looking pretty good for a move back up to the prior highs, and who knows what happens afterwards. It's just a general state of affairs. It just looks like it's still a pretty decent market for gold because it tends to ignore where it should weaken, but on any occasion it strengthens again. So that looks pretty decent to me. Silver much less of a real side picking right now. It holds up. It holds up, but as I've been saying so many times, if the metals are beat together with some weakening data, as we've seen on the Michigan again, gold is likely and should as well outperform silver, and this is what's happening now. So we are somewhere in the middle, 30 and a half, 31, and we will see if it goes back up. But I'm less involved now as well in silver, but than in gold. But I still keep my long term going because I think longer term it's still looking okay for to go higher. You know, we are still consolidating at decent levels. Ryan already covered the cable. Aussie. No, yeah, dollar Swiss. Yeah, that's a good one. Because we are gradually, even though Euro Swiss is doing a bit of the heavy lifting right now, but we seem to confirm together with the rest of the dollars that we are perhaps in this little bit of a downside channel right now. We're in the middle of it, 89.20, 89.35. That should tell us what is going to happen with it. But again, as I said before, 90.10, 90 and a quarter, this is really going to be the zone that has to break higher. I said this is one that could have broken higher if we get sticky numbers on the CPI, better data out of the US, but it didn't happen. So despite the Swiss being a low yielder, this looks to me like we could just gently slip lower together with the rest of the dollars. Now, down to where, that again will be decided on the process, I think. And if you look at the Euro Swiss, it is behaving better. It's actually, if you look at most of the Euro process, they are behaving a bit better this morning. So it's quiet down a little bit, although France is still struggling to get its government together. So that may still be a bit of hamper on the euro. But we've seen this morning the euro ticking up a little bit, and it's actually euro Swiss. We'll have to look at it as well, because we are nearing again that 97, 70, 75 level. If that would break, then probably the Swiss advance versus anything else will slow down. Okay, so keep an eye on that 97, 70. I have to look at the S&P is just not giving up anything at all. We are on extension levels here, right here, 56, 35, 40. If that goes through, and it could, on the back of what's happened with Trump over the weekend, and the expectations now for the elections, it could push through, and even into the 57s, you know. The first little level that I have now is 55.90. That if that would go, we may see, and I have to go on a shorter time frame. 55.90-ish, that is going to be the first level, and then 3/4 around here. Call it rather 55.75. If that starts to go, because we can see that has been a springboard for the two last rallies, 55.75 is one that we have to keep an eye on to the downside. But for as long as that holds, I think those 57s are not to be ruled out, you know. Yeah, we've seen the rand. Okay, there's been a bit of negative news or outlook coming up regarding F.A.C.E again over the weekend. And also, I think we have to stick around into a bit the same basket as we may have to put the Mexican in, or the Chinese yuan in also. It's holding under no, that's the euro mix. Sorry, I was planning to show the dollar rand. It's holding below 18, and as I said, it looks a bit similar to what's happening to the Mexican peso as well. And also on the geopolitical side, we know that South Africa is rather siding with China and Russia. So this looks to me like a bit of a logic level that it bounced. And also there's been a bit of negative news on F.A.C.E results. I've been talking about that. That it would have been something temporary, at least, all the positivity around this comment, it seems to start to happen. So yeah, pretty big move up on the dollar rand. It looks quite cold below 18. Yeah, I'd say anywhere closer to 18. I may again start to look to re-enter this. Yeah, and then we have seen this rally on the dollar mix. Yeah, it is the Trump effect, right? And we are turning around this 1783, 84 right now. I wouldn't rule out a move back up to 95, even 18, 1805, depending on how the US market walks in. And as I said, time is starting to work perhaps against the Mexican peso now, even though it's still an 11% currency. I've been long time, sorry, a bull on the mix. I am starting to slowly change my opinion. And yes, we can still have, due to its high interest rates, and perhaps when the Trump effect is waning a bit, we could still see a move lower here. But depending on when and how we reach it, I would say that any move down into this zone here, call it 1730, 1745. I may not specifically do dollar mix, may look at another pair, but I think the time for the Mexican peso is starting to run out into the second half and the latter part of 2024. So that is now my overarching feeling for the MEX, is that time may start to play against it. Okay, so this is one to be seen. In the meantime, I wouldn't already rule out a move higher based on the Trump effect. I think I've done enough and said enough for the start of this week. Yeah. Just a quick one on this. Yeah.
Up to you, mate. Yeah, if you've got something else.
Yeah, just a quick one on this euro dollar. Yeah, we're still in this big triangle, but we are now tickling those highs here, and perhaps the market a bit short euros, perhaps a bit of I wouldn't call it complete risk off because the stocks are not really risk off, but perhaps those euro crosses. I'm looking at those euro crosses, even euro Aussie, euro Kiwi, euro Canada, and now euro sterling. Just 15 points on the euro sterling, but it's all looking like perhaps this euro could have the potential to go and have a look at this 109.75.85 at some stage. I'm just saying the potential. I don't know whether it can, but in the meantime, we have to acknowledge that in the medium term, it did hold those lower levels. So we can't exclude having a look higher here. And now this the top end of the triangle and a bit of an extension are coinciding with the highs here, which is also around 109.75.85. Yeah, that's just a feeling that I have. I wouldn't rule it out. Okay. Yeah, like the other, I don't know, Angela. She's a lawyer, right? She can put her audience to sleep in 5 minutes time, which she usually does. But she's also not going to be more hawkish than needed for longer than needed either, in my opinion. So she may leave the door open. That is just at the start of this week. She may leave the door open to September. And with that, Ryan, back over to you, mate. Thank you.
Thank you very much, mate. Good stuff as always. And thank you everyone for coming to the Flow Show, getting you set up for the week ahead. So hopefully you don't fall in on any landmines. And on that note, we shall call it a day. Have a good day, have a good week, and we'll catch you all tomorrow. Thank you very much.